Now, when you go into a binary option platform, there are certain ways you can be able to trade different assets. The first type of trade that's very common in each type of binary options is called a high and low type of trade. And what that means is when you believe that a specific asset will rise or fall within a certain amount of time and you want to place a trade in that, then similar to how we were just talking about before on the option price, the call, and the puts, that's where you'd be able to use. You'd basically go to the binary option platform and you'd say, you know what, I believe that this specific asset is going to go high compared to the value that it is right now. Or if you believe that there's some type of adverse news that happened, then of course you're going to say, well, I believe that the current asset is going to go lower than the current price. That's what a high and low is. The next feature, or the other type of binary option that you're able to trade, is called a touch or no touch. And what exactly is that? Well, a touch or no touch means that you believe that at a certain level within the market, the price may or may not touch as that specific level. Such as if we're going to talk about Apple, for example, and at that level, let's say we're at $100 at this point, and you believe that there's a support and resistance line, which, by the way, a support is above your strike price, is below your strike price, and resistance is above your strike price. And I'll show you an example on, if you can take a look at the image to the right. If you believe that the price will not touch any of those levels, then you would basically place a no touch type of trade. But if you do believe that the price will touch either the support or resistance line, or support and resistance price level, then you make a binary option touch trade. And that means that if the price does touch that level just once, and that's all it needs to do before the expiration time, then your trade becomes in the money and you get your investment amount back plus your percentage in return. So it's pretty simple, right? The next one we're going to talk about is called the boundary. And this is very similar to the touch or no touch, but the only difference is that if the trade within that the trade that you place at that time has to maintain its level within that type of boundary that you set up, which is very similar to the no touch type of trade, but not the touch one. So think of it like a tunnel. The price has to basically maneuver itself within a certain level, within either its support or resistance, without touching anything before the expiration time. If it does touch let's say the marked levels that you had before you place a trade, then of course you will not get your money back. But if it doesn't, then you're okay. All right, so those are the terms.